Hello, everyone. Thanks for tuning in to another episode of Wilson Weekly. I've got Doc Wilson, of course, over here to give us an update on the market this week and what's happening. Hey, Doc, how you been? You been well?
Yes, thank you, Chris. All good. The year marches on. We're heading towards Easter now, although I think we've still got 3 or 4 weeks before our major first half of the year holiday. So we're well and truly ensconced in the year in terms of housing market activity. We've got some interesting data today. We're going to have just a quick revisit of the latest inflation data, which was for January. Of course, the next lot of inflation data will actually come out this week, but I just thought we'd revisit the most recent data and have a look at how some of those major drivers are performing in terms of the inflation story. Of course, inflation is very important because that's what the Reserve Bank looks at in its determination for interest rates. Of course, we know interest rates were cut at the last meeting of the Reserve Bank. Will they be cut again? Not sure about that. But certainly we need to see how inflation is tracking if we are to get a sense of the prospects for interest rates. The other thing this week that we're going to look at, but what is released this week is the other major economic factor in terms of interest rate policy, and that's the labour market, which of course is a significant signal to the performance of the economy generally. So the February labour market data will be released later this week, and we will discuss that next week. So that's another important insight into how the Reserve Bank might feel about interest rates at its next meeting. But for this week, we're going to have a look at, as I said, the latest inflation data before it's superseded in a couple of days' time. But most importantly, we're going to look at how over the last few weeks the key drivers of inflation have been performing. And also this week, we're going to look at the latest state, local government area house price data. So that's interesting. Regions are performing up to date. So, and as usual, we'll look at the latest auction results over the past week, and we're seeing an interesting, I guess, diversion in terms of what's happening in our auction markets. We're certainly getting a different level of results between a couple of the capital cities compared to the rest. So we'll have a look at those capital city markets that are performing well in terms of auction activity, and those that aren't performing as well. So lots to talk about, Chris, this week as usual. So let's get underway, shall we? Of course, My Housing Market is my brand. Every week we bring you, in conjunction with the good folks at Infinity, the latest information in terms of the property market, not just prices and rents, but importantly the key drivers of activity in our housing markets. And as we just discussed, of course, interest rates are a key driver, and the economic information that revolves around the decisions on interest rates. So we very much, and we do bring this to you on a weekly basis, are about the current state and future prospects of housing markets. So it is about the current state. That's why we update all the data on a weekly and insights on a weekly basis. So you're getting the latest information and, of course, the latest narrative and insights and analysis according to that information. So let's get started. It is the week ending Wednesday, March the 19th. For those motorsport fans, last week, of course, we had the Melbourne Grand Prix, which was the first Formula One event for the year back in Melbourne after a break of, I think, 5 or 6 years to start the season. I was fortunate enough to attend my first Formula One event, and I don't want a big note, but I was part of the group that enjoyed the Mercedes-Benz F1 Lounge. So
Sounds
I had a
fun,
good day
mate.
that
Sounds
day.
fun.
Yeah, it was fun, but unfortunately not so fun for the Melbourne fans who are all looking for Oscar Piastri to bring home the bacon, and he just got really unlucky at the end. But that's another story. We're not here to talk about sports, but it is sort of, I guess, marks what's happened, the big picture over the last week in Australia. And as I said, we're onwards and upwards and well into the year now, midway through March. This week, we're going to look at the February regional house prices, January inflation data, and the latest insights into the key drivers of inflation in Australia, and as usual, the latest weekly auction results. So let's get started. The January inflation data showed us that it was steady over the month. This was the monthly data. Of course, the Reserve Bank looks at the quarterly data in terms of its decision making, but we do get those monthly insights into how inflation is tracking. The ABS introduced that after some criticism that we didn't have a monthly measure of inflation, which the majority of other advanced economies do have. Having said that, the Reserve Bank still says it relies on that quarterly data set. So, again, a little different and perhaps a bit more backward looking compared to other advanced economies in terms of inflation. But nonetheless, we can still get a reasonably good guide to how inflation is tracking on a month-by-month basis, and it gives us something to discuss, particularly in regard to the prospects for interest rates. So, headline inflation, of course, there are two sort of measures of inflation. Just quickly explain that. The headline inflation is the overall increase in prices according to the basket of goods that the ABS have determined that we are all involved in. That's what they measure, the movement in prices according to a basket of goods that they establish that we all spend our income on. And that basket of goods is weighted according to what's more significant in terms of our spending pattern. So the headline rate was steady at 2.5% compared to December. So that is a low rate, and underlying inflation is still within the target range of the Reserve Bank of 2 to 3%. However, the Reserve Bank doesn't look at the headline rate. It looks at a trimmed measure of inflation, the underlying rate, which takes out the volatile elements of price changes. And the underlying inflation rate over the month, however, increased from 2.7% to 2.8%. Now, the headline result has certainly been impacted by the government's electricity subsidy that was mentioned in last year's budget. Of course, we all got that $300 handout per household to help us overcome high electricity prices. And that's been a significant part of why we've seen the inflation rate fall because of the impact. And of course, it's a big impact. Energy costs make up a significant part of what the ABS measure as household costs. But we are starting to see the impact of that government handout falling now. Of course, it was a one-off. And the impact is, as the months go by, is not as great, because we're not getting any extra relief from the government for electricity prices, which underlying prices will continue to rise as we move into a non-carbon energy future. An example of that is that over December, the impact of lower electricity prices was a decline of 17.9%. So electricity prices fell by 17.9% over December 2024 compared to December 2023. And that fall over January, however, was less. The fall was 11.5%. So less of an impact on lowering inflation, from 17.9% fall to a fall of 11.5%, which nonetheless is still a significant fall. But we are moving away from the relief that we got from that electricity handout from the government as the months move on. So that was one factor that pushed up, that kept the inflation rate steady. So we weren't getting the same impact from lower electricity prices. However, we did see the fall in fuel prices compared to the previous month was higher, and that offset that increase in the fall, or the decrease in the fall of electricity prices. So the fall in fuel prices was down 1.9% compared to a 1.4% fall the previous month. So that sort of offset the change in electricity prices. And rents also improved again from 6.2% rise over December to a 5.8% rise over January. So all those bits and pieces, you put that together and we got a steady inflation rate. An underlying inflation is still within the RBA target range of 2 to 3%, even though it did pick up. But this is the monthly data, and we need to look at the quarterly data, and that won't be coming through until the beginning of April. The end of April, beginning of May, which will be the quarterly data set from the ABS. But nonetheless, this gives us a sense of what's happening on a month-by-month basis. So that's just a synopsis of what happened with inflation over the year to January. Well, let's have a look. So you can see there quite clearly the trend there. This is the underlying inflation rate, just picking up a little bit, as I mentioned. This is the annual change in monthly inflation, just up a little bit compared to January, 2.8%, but well down on the 3.8% recorded January last year, and of course well below the peak to inflation of 7.2%. You can see the trend there has been tracking downwards for most of the past year, certainly most of the past 9 months. And that's, I guess, what's encouraged the Reserve Bank to cut rates, because it believes that trend is now looking sustainable. Well, whether it is or not, we'll see in the future. But certainly that downward trend in the underlying inflation rate has been a key factor in the Reserve Bank deciding that inflation, at this point anyway, is under reasonable control. So let's have a look at the outcome for some of those key drivers of inflation. We've already sort of discussed that. We can see there that when we look at the price of oil and the inflation rate, there is certainly a key relationship between the price of oil and the inflation rate there. Almost when you shift it forward a period or two, you can see there that you can see there that the inflation rate tracks the change in the price of oil, which has fallen sharply over the past near 2 years, and is continuing to fall. So it's important we look at the price of oil, because that can give us a sense of where inflation is heading. So when we look at the annual change in the monthly oil price, which we can do, so this is the average international price of oil. Let's have a look at it each month and see how it's improved, how it's changed over the past year. We can see there that the price of oil has started to fall since August last year compared to the previous year. That's had an impact on inflation, but the price of oil its impact on inflation, it hasn't fallen as sharply as it has in previous months until last month. And last month, February, we're talking about here, we've seen another sharp fall over the year in the price of oil, the monthly price of oil, which is good news for the prospects of inflation, because as we see, it is a key factor in the inflation rate, the price of oil. So down 7.3% over the past year when we look at the February result. So good news there for in the outlook for inflation rate. We know, however, that the price of oil is a very volatile commodity. You can see there over recent months clearly the trend downwards in the price of oil. And the latest data on oil has it at just $67.18. There is some talk, because there's been some US military action against some of the allies of Iran, that might put upward pressure on oil prices. However, certainly the recent trend is for oil prices to fall and to continue to fall if that trend is consolidated. But as I said, we need to take that with a pinch of salt, a grain of salt, because it can be a very volatile commodity. But so far, so good in terms of lower oil prices, meaning a lower inflation rate, and a key to what the Reserve Bank will determine in terms of in its next interest rate meeting. House building costs are also an important factor in what the ABS determines for housing costs. They measure the cost of building a house, not an apartment, but a house, as part of and they look at rents as well. We'll look at that in a second. So our latest data on house building costs is looking a little better. This is the My Housing Market monthly annual change in building costs. So what we do is we take the quarterly cost of building a house, convert it into an index, and then advance it month by month. So it was flat over January compared to February, and this data is derived from ABS building approval data. So flat after rising over recent months. So we're starting to see house building costs taper off. And when we look at the index in terms of its change from the previous year, we can see the change was had fallen actually down to 3.5% over the year to January. So that's another good sign that house building costs are starting to fall a little bit lower than where they were through last year. The ABS has said that it's been tracking lower house building costs. Our index was actually going a little bit against that over recent months. And our index has been pretty good in terms of tracking house building costs. So let's see how the outcome with the next lot of ABS data. But certainly our most recent house building cost index data shows another fall over the year down to 3.5%, which is a clear improvement on the last 3 months result. So again, some positive news going forward there for the inflation rate and also for the prospect of interest rates. Now, I mentioned rents. Rents are also an important part of housing costs as the ABS measure it. We measure at My Housing Market asking rents, and we measure capital city asking rents as part of our national quarterly asking home rents index. So this is houses and units combined. This is capital cities, so it doesn't look at the regions. And you can see there that this is our index, how it changes on a quarterly basis, week by week. Now, we know that there's been some relief in the rental market over the past 6 months, certainly over the middle part of last year. We have seen recently, however, as we described last week, an increase in vacancy rates over February. It looks like rental markets are tightening again. So that might not be good news for tenants in terms of the prospect for higher rents. And we're just starting to track that a little bit on our index after seeing rental growth falling away through the middle part of last year. It's now starting to pick up again. This is overall capital city rental growth. Now, it takes some time for asking rents to work their way into the total rental market. Of course, the ABS measures all rents, not just asking rents. So most rents, of course, are for existing rental properties that have leases or are certainly on existing relationships, and it takes some time for what happens in the asking rents markets for that to work its way through to the total rental market. So the prospects are that, perhaps after some good news there on oil and house building costs, this is moving a little bit the other way in terms of the prospect for higher rents. But nonetheless, it is coming from a weaker period of rental growth last year, towards the middle and end part of last year, and that may yet to be work its way through to the total rental market. So given that relationship and the lags that are involved, we may start to see some relief in the total rental market, reflecting what happened with asking rents in the middle and towards the end of last year. So maybe some good news there again for a lower inflation rate. So that's our economic update, Chris. It's just a little bit of a discussion on interest rates. I think this is important for those that are interested in the prospects for the housing market, because it tells us how the Reserve Bank perhaps will be thinking about interest rate policy in light of what's happening with inflation. As I mentioned at the beginning of the show, we are going to discuss the latest labour market data next week. Okay, so here we go. Let's have a look at the top 2025 regions to February. And it's interesting that when we look at the major regional centres in each of the states, they sort of tend to follow what's happening in the capital cities. So New South Wales starts it off here. No surprise, the top performer there is the Tweed. Annual median house prices up by 16.9%, median of 1.15 million. And as I said, no surprise given how strong the Gold Coast and Southeast Queensland have been. And of course, the Tweed is adjacent to those Gold Coast markets, and they've been the top performer in terms of the major LGAs in New South Wales over the past year. Value market, Albury, second top performer, 14.5%. That Newcastle market keeps on keeping on in number three position, up by 11.2%. And Ballina, which is a bit of a surprise given that it's adjacent to the Tweed region, the underperformer, down by 1%. Big contrast there, the Melbourne market, the Victorian market, big contrast. And of course, as we know, the Melbourne market has been an underperformer compared to the other major capitals over the past year. Interestingly, the Macedon Ranges has been a breakout performer over the past year, up by 25.3%. But the Macedon Ranges does tend to have a variation in property types coming through. There are some high prestige areas in the Macedon Ranges, and if we do get a number of sales at the higher end of the spectrum compared to the previous period, it can push those annual prices up. But nonetheless, the Macedon Ranges top performer, and it was the only LGA in Victoria, major LGA in Victoria, to record positive growth. Bendigo, flat over the years, down by just 0.2%. But again, it's the more value-orientated regions of Victoria that are producing the best results, even though nonetheless they are lower results over the past year. And let's have a look at the Queensland results. Hey, can you believe this? Look how strong those Queensland local government areas have been over the past year. Mackay now the top performer, taken over from Townsville, which has been an underperformer over recent years, but still up by 26.3%. Big revival in the Townsville market over the past few years. Mackay now number one, up 30.5%. Rockhampton up 19.4%. So all within regional proximity of each other, the three top markets. And of course, Cairns keeps on keeping on, up by 17.6%. But it's only really Noosa that's been under 10%. Noosa's had a big surge over the past couple of years, so it's probably having a little bit of a breather at the moment, but certainly reflects how strong the southeast Queensland, Brisbane, Gold Coast markets have been, or the Brisbane market has been. That strong growth in the Queensland local government areas, quite spectacular growth, in fact. Tasmania, Launceston continues to be the top performer there over the past year. The only major local government area to be recording positive growth, and now well ahead of Hobart. They're down 9%, but Launceston up 5.6%. Palmerston up 9.8%. The two major LGAs in the Northern Territory. It continues its preeminence in terms of growth compared to the other LGAs in the NT. But Darwin just starting to pick up again over the last period, up by 5%, but that's coming from a lower base. So let's have a look at the latest weekly auction results. As I mentioned, we're starting to see a bit of a breakaway from the Sydney and Melbourne markets compared to the other capital cities. So Melbourne and Sydney auction activity on the rise over the past week, higher clearance rates and higher listings. But even though we had an increase in listings in the other states, the clearance rates were lower, and we're just starting to see that breakaway from Melbourne and Sydney compared to the other capitals in terms of weekly auction results so far this year. So interesting, and it's also interesting that we're tracking, as we track prices on a daily basis, certainly the Sydney markets had a big last month for house price growth. So those higher clearance rates, which we've seen in Sydney, are certainly translating to higher prices in Sydney, which we expect. And that's why we look at the auction results every week, because they are a very reliable forward indicator for what's going on in the underlying activity of housing markets. So Sydney, 899 auctions, higher than the previous week. A solid clearance rate there, 74.6%. Sydney has been hovering around about the mid-70s in terms of clearance rates so far this year, and that, of course, is a good result for sellers. Shows there's plenty of competition for property there when we're clearing at nearly 3/4 of the properties offered. And again, interesting, Sydney's tracking higher than where it was a year ago, both in the number of auctions and in the clearance rate. A good result there from Melbourne, 69.4% clearance rate. It was the Grand Prix weekend, so a little bit of distractions going on. Certainly not as much as we had the previous week with the Labor Day long weekend. Big rise in auctions, of course, because we had a change from the previous long weekend holiday. But the numbers of auctions in Melbourne were down compared to the same revival weekend the year before. And I think that's the Grand Prix effect that kept auction numbers down, because it is the first Melbourne Grand Prix opening the season for 5 years. But similar to Sydney, the clearance rate is higher in Melbourne than it was at the same time last year. So as I said, Melbourne City seemed to have broken away, higher listing numbers and higher clearance rate. Brisbane ran about where it was the week before. Auction numbers were higher, but again, except for auction numbers, the clearance rate's lower in Brisbane and Adelaide and Canberra. And we've seen that sort of trend emerging where Brisbane, Adelaide and Canberra are certainly performing, less than or not as well as the Melbourne and Sydney market. So this is the monthly auction clearance rate to date data for Sydney. February, March have been good, strong years, good, strong months so far for Sydney. Certainly well above where the Sydney market finished last year and still tracking above where it was at the beginning of the year last year. And as I said, we are tracking quite solid prices growth in Sydney now. So I look forward to that when we get the final data for March, just to see how prices have increased in that Sydney market. Melbourne too, some good results here to begin the year, well ahead of where it was, well, certainly ahead of where it was over the same period last year, same month last year, and certainly tracking above where it was at the end of last year. So good start to that Melbourne market. We are starting to see some early signs of a breakout in the Melbourne market, but it's still we still have a bit of a way to go before we start to see prices rise, I think, in the Melbourne market. But this is a good start with these clearance rates. We did see on the weekend that the Melbourne prestige regions, which have been dragging the chain, performed a little better. The Inner East, which is a premium market in Melbourne, actually had the top clearance rate at the weekend. So some good signs there for that part of the market that's been really keeping prices growth underperforming. Brisbane, again, we're starting to see this difference in Brisbane compared to Melbourne and Sydney. Its clearance rate falling so far over March compared to February, and well down on where it was a year ago. Same story here for Adelaide. It also has come off the boil, that Adelaide market, which was very strong a year ago. The Canberra market looks good in February, but just started to ease last week. We need to see if that can be rectified over coming weeks, or whether this is now just that real problem that this Canberra market has in clearing properties at auction, and therefore higher prices in Canberra. But yeah, a little bit of a disappointment for sellers last week in Canberra, given that we've seen a reasonable resurgence over the past 6 weeks or so. If you're looking for that auction clearance rate results, the Capital City snapshot's available on my LinkedIn channel, Doc Andrew Wilson at LinkedIn, 6 o'clock on Saturdays, and the full national report available on Sundays, which includes the regional breakdowns for Melbourne and Sydney, and also the top 10 sales under the hammer over the past week for each of the capitals. If you missed that weekly auction market report, there is a QR code. If you take a scan of that, take a picture of that, it will give you a PDF copy of the latest weekly auction market report. Just to finish off, here's our great little Infinity My Housing Market suburban price app. If you take a scan of that or click the link, you can get access to the app. You do need to get a password from our friends at Infinity. It's well worth getting hold of this app. It is about looking at what's happening on a suburb basis nationally. It shows every suburb in Australia that has data, and it measures asking prices and asking rents. So it's telling you exactly how the market's performing right here and right now. So this is what sellers are asking for their properties, and what landlords are asking for their properties for rent. So we can filter it for price or rent. Here we've filtered for price. We can look at the outside capital city regions or the capital city regions. Here we've filtered for New South Wales, Sydney capital city region, a suburb of Blacktown. You can filter for house, townhouse, or units. We've filtered for house. You can also filter for the number of bedrooms. How fantastic is that? We've filtered for 5 bedrooms. It not only gives you the current median asking price, it also gives you the range of prices that are being asked. The high there is $1 million, the low $970,000, and it also gives you the number of properties that are for sale at the moment. So a great little analytical tool for those wanting to understand what's happening in particular housing in particular suburbs in terms of housing market activity, and we update that on a daily basis. So look out for that, and we do the same thing here for rents as we did for prices. And there's the result for Blacktown. We also, for investors, we've also got an add-on to our app, which allows you to look at what's happening with yields. Now, of course, yields are the return on investment, reflecting what the amount of rent you get over a year compared to the actual asking price value of the suburb, and that gives you your yield. Your return on investment, of course, that's a gross yield, so it doesn't account for your personal expenses according to individual properties. So this is the top 10. So we have the top 10 for each one of either the capital city region or outside capital city region. This is for New South Wales. You can also filter it for units, townhouses, or houses, and the number of beds. So not only does it give you the top 10 yields, but it also gives you the number of properties currently for sale in those particular suburbs, and also the number of properties for rent, and also the vacancy rate. So, hey, you want to do some analytics, this is all the data you'll require to start to take a scientific approach to your property decisions. And if you click on the link to that address, it'll actually take you to a map of that particular suburb. So if you don't know where it is, they'll tell you where it is. So get hold of that app. It's a great little performer. Next week, we're going to look at the February labour market data, which will be obviously very interesting for the Reserve Bank in terms of its interest rate decisions. We saw the unemployment rate rise over January compared to December. We're starting to see a weakening in our economy. We'll find out. We'll find out next week. And also, we're going to look at the latest population data, which has been very insightful in terms of what's happened in our housing markets through the COVID and pre-COVID period. And as usual, the latest weekend auction results. If you want to get a copy of this week's report, there's another QR code. Take a scan of that, photo of that, and it will give you a PDF link to the report for this week, which has been a busy week, a bit up and down, but nonetheless, we look forward to bringing you our next episode next week for the Wilson Weekly in conjunction with Infinity and My Housing Market. So thank you very much, Chris. My voice is held up this week, which is good, and I look forward to doing it all over again next week with a lot of passion and enthusiasm.
I can already tell.
Obviously, to see the labour market data, so all good.
It will be interesting to see the data. Looking forward to it next week. Thanks, Doc.
Thank you.
Thanks, everyone.